Shares of Berkshire Hathaway fell sharply after the chief exec Warren Buffett announced his retirement. Not surprisingly, it's not just any investor, it's Warren Buffett. They were down 5%, $42,000 loss for a share of the Class A stock, which trades, as you see, $750,000. The Oracle of Omaha, Sage of Omaha, told shareholders he will step down by the end of the year. It's the end of a remarkable run. He's delivered 5.5 million % return to investors. In 2002, I spoke to Warren Buffett, and it could have been yesterday for the prescient and important ways in which he put the investment strategy.
If you take the last century, 100 years when the Dow went from 66 to over 11,000, there were many periods in there where people had all kinds of reasons to lose confidence. The Great Depression, the wars, the Cold War, a number of things. I don't think it's important whether you're confident about tomorrow or next week. I mean, you can be very confident about the economies of Europe, the economies of the U.S. over time. But you can't predict what will happen in any given quarter. You get surprises. And I don't try to, and it doesn't really make any difference.
So, hunker on down. Don't worry too much about it at the moment, and things will get better.
Over time, things will get better.
Clearly, my hair's got not much better. Warren Buffett. Greg Abel will be the next chief executive on Mr. Buffett's recommendation. The 25-year veteran of Berkshire has big shoes to fill. Lawrence Cunningham is the author of the Essays of Warren Buffett, written in collaboration with Mr. Buffett himself. He also co-wrote Margin of Trust, the Berkshire business model. It's too simplistic to say the folksy way of Buffett was invest in what you know. American greatness will always win. It's more sophisticated than that, isn't it, what he did?
Yes, indeed. And that collection of the essays contains a lot of the elegant elaboration. At core, I think he does try to keep it simple, and he's got a few profoundly simple ideas, but then when you put them all together, it can seem like a career thing to master.
How serious was the passing of Charlie Munger for him? Sidekick for decades. They were both elderly men, so it's not surprising that one of them went at that particular point, but it took its toll.
Yeah, I think one of the most important lessons in that book, and that we should take from Warren in terms of executive leadership and maybe even running your own life, is to have a number two. And Warren and Charlie were a dynamic duo, and they almost never did anything without the other's assent. And I think it made running Berkshire a lot of fun for Warren. And I do think his passing last year was a factor in Warren deciding this year is the time to, ask the board to have Greg succeed him. I think if Charlie was still around, they'd do it for another year or two. So I think it's critical.
Many of us have looked at the recent investment strategy. They've been going into cash because they say there aren't the investment opportunities there. And many of us are thinking, hang on, I wish I'd thought to do that. What did he know? His strategy has always managed to be, it's not just playing safe, it's always managed to be sensible, sensibly safe.
Yep. He thinks that his mentor was Ben Graham, who argued that the most important thing you can do in making an investment is have a margin of safety, have a big gap between the price that you pay and the value that you get. And Warren lived by those words. He told me once that those are still the most important words. But the other part of it, you're right, is then to have your assets, your resources available to deploy them opportunistically when that gap widens. And that's always been a tenet of faith at Berkshire. They've always had meaningful cash resources to deploy on a moment's notice. And they did so spectacularly after the dot-com bubble burst,
right, after
the financial crisis of 08, 09. That accumulation of cash now is so massive just because Berkshire itself is massive, almost $1 trillion market cap. and they're talking yesterday that they've got a $10 billion acquisition kind of on the table in the works, and that would be big for most companies. For them, it's trivial. They're looking for the elephant, and who knows when it will come, but it often does.
And he never split the stock, and he says even now he's not going to sell a share.
That's the third most important thing to get from Buffett is the always wanted quality shareholders to own Berkshire, meaning people who are focused on his business, not on the market, and long term, not looking for short term pops. And he thought like the way to do that is to write some good letters, bring them to the meetings, and never split the stock. And so, a lot of people have stock at $800,000, $900,000. It's hard to sell them. And so that was part of it. He wanted shareholders who would be willing to hold through thick and thin.
I'm grateful to you. Thank you, sir. Thank you. I appreciate it.